Good morning, America. Thank you for watching Taxes Made Easy. And we've got an interesting show. A lot of news came out over the weekend, mainly about taxes on tips. But our main topic for the day is going to be about CSEDs. So, how are we producing CSEDs, or how do you track them? And really, this is all about when does IRS tax debt actually expire. So, give us a call if you have questions about this, but we're going to really talk about how long does the IRS have and also states have to come after you and collect taxes. So big question. Last week we talked about doing a compliance check, going in there and seeing what's going on. And today we're talking about how long can they actually come after you. So very important and a lot of good information here, and stay tuned. We'll be right back after this break. Welcome back, everybody. And again, thank you for watching Taxes Made Easy, either live or on rebroadcast. So again, we're just going to dive into some of the articles today. We're going to start off with the IRS. So the IRS came out with some announcements. First of all, this is fairly normal news if you've seen this, but for Hurricane Debby victims in all of South Carolina, most of Florida and North Carolina, and part of Georgia, again, they get some deadline relief to file their tax counter. So a lot of counties here, 46 counties in South Carolina, pretty much the whole state, 55 counties in Georgia, and then, 61 in Florida, all of the counties in South Carolina, 55 counties in Georgia, and then 66 counties in North Carolina, all getting this tax relief. So main thing is, instead of having filing deadlines beginning August 24th, everything's put out till February 3rd, 2025. So if you are in those areas and you were hit, this includes valid extensions. It gives you longer to file if you filed for an extension. Quarterly payments that are due in just in less than a month. Well, just over a month. For September 16th and January 25th, those got put out. And then quarterly payroll taxes that are due on October 31st to January 31st. So anything due in this time period is going to get pushed out till February 3rd, 2025. So the money's still due, it's still owing, but they're giving you additional time to deal with this. So again, anytime there's a disaster, the federal government normally does provide some relief here. So if you've got to recover, this is why it's so important to have backups to be prepared in the case of emergencies, because they happen. So again, if you are in Florida, South Carolina, Georgia, or North Carolina, go to this irs.gov. It's right there. See exactly if you fall into those counties, and then you can get that relief and know that you don't have to comply with these closer deadlines dealing with it in the middle of dealing with the hurricane. Next article here, also from the IRS. And this is the IRS is updating their draft version of Form 1099 DA. So this is all about digital assets. A lot of the allure of digital assets is people thought it would be a way to invest without getting taxed, without the government knowing about it. Well, it didn't take long for the IRS to get wind of what's going on, and so you have to do a 1099. So not only will you get a 1099 just like other investments, you have to submit it to the IRS because the IRS is going to get a copy as well. So this is a 1099 DA for brokers to report in certain sale and exchange transactions. So just like any other 1099, they're forcing third-party reporting to the IRS to comply with the nation's tax laws. So whoever's selling or these exchanges now have a legal requirement to submit 1099s directly to the IRS and then directly to the taxpayer. So again, the same burden that is on other forms of investments. Unfortunately, sorry, you can't hide here. And if you do find darker, there are exchanges on the dark web, etc., that won't comply with this, but a lot of them are just straight out scams. There's nothing stopping them from just taking your money and ripping you off. So again, this is to put crypto investments on the same on parity or on the same level as other forms of investments. So again, if you are investing in digital currency to avoid accountability or avoid the IRS, no longer going to happen unless you're dealing with some very shady stuff that is illegal now. If they're not complying with the law, it's illegal. So I don't recommend it. It's never worth it. So if you have any questions, give us a call, or if the IRS finds you, might have to become our client if you're dealing with things that aren't being reported correctly. So be aware you have to report digital asset transactions just like any other kind of investment. So this is an article. We've got a couple articles on there trying to be fair to Kamala Harris. So Trump, of course, is not happy that this last weekend Kamala Harris came out and essentially stole one of his major policies that he announced over a month ago. And we're talking about taxes on tips. So they first announced it June 9th, so I guess 2 months ago, before Harris announced her position saying, oh, we're going to get rid of taxes on tips as well. She's claiming her plan is a little different because she has a plan to increase the minimum wage at the same time, which kind of, if you increase the minimum wage, people get fewer tips. So while it sounds helpful, increasing the minimum wage at the same time really does hurt taxpayers. And that's we're going to see this as we go through this. So again, some of the ridicule, you could argue, is valid. It's really interesting. So when Trump came out with his policy, he was ripped on the left, and we're gonna jump into those articles, maybe fairly so. So the question is, when is the next time they're going to come out with the same policy? J.D. Vance came out and asked, well, why isn't she doing it now? So it's interesting, and this is going to be really where we're going to go with this. Claiming that she probably wouldn't even do it. They've been in charge of the government, so why didn't they get rid of taxes on tips? The real point is they have not been getting rid of taxes. They've been increasing the IRS. And so the crackdown on tips in the service industry. So, and this is the key part that was buried at the end of the article. The Biden-Harris administration announced the service industry tip compliance agreement, an IRS-run program cracking down on the reporting of tips to improve tip reporting compliance. So if anything, the Biden-Harris administration has been cracking down on tips. They have been stepping up enforcement by the IRS to go after that. So it's very ironic that now she comes out and says, hey, let's stop taxing tips. So, again, this is a new service industry tip reporting program, and the IRS has been very aggressive about going after tips. One of my own children has worked in a service industry, and again, had to pay taxes on tips, and everything has to get reported. So, going right along with this is an article from NPR. No tax on tips, why politicians love it and economists don't. So, see, they don't agree on hardly anything, but now they both want to get rid of taxes on tips. Why? Because again, she wants to raise the minimum wage and eliminate taxes on tips for service and hospitality workers. Trump has been campaigning on this since June, and a lot of people really kind of shaking their head here because now it sounds like we want some kind of choice between Republicans and Democrats. If they're just saying the same thing, it's hard. But again, moving on to what really talks about, she's trying to claim that hedge fund managers and lawyers might try to take advantage of the no taxes on tips policies, which I think is a stretch, to say the least. Nobody's going to start tipping their lawyer. Lawyers charge enough as it is. But it is gaining bipartisan political steam. So Ted Cruz and Democrat Senators Masto and Rosen both from Nevada are both pushing for this. And then it's also working its way through the House. So if you go to many economists, especially on the left, think it's a horrible idea. And we're in the middle of campaigns and silly season, says Rosenthal. So race to the bottom would be a better way to describe tax policy here, which I think is a fair argument. We didn't used to tax tips. Why did we start taxing tips? Because the government needs more and more money because we're spending more money than ever. But it's just a drop in the bucket when you look at the whole thing. And he hits 3 counts or different ways that this fails. The first one I think is ironic. National ban on taxing tips would disproportionately help a serve in South Carolina where you have a lower minimum wage and they get more of their income through tips. However, if you're in California where the minimum wage keeps going up and up and up, people aren't tipping nearly as much. Why? Because they can't afford the food anyway. It's just getting to the point where it's unaffordable. So where do they cut back? Obviously in tips, which I think is very ironic that Kamala Harris is coming out and saying, "Hey, we're not going to tax tips, but we're going to raise the minimum wage," which makes sure that they still get more money more money will be taxed because your entire minimum wage would be taxed, and if they increase it, you'll get fewer in tips. That's tax free. And get taxed more on your increased minimum wage. So again, it's very ironic to be behind and pushing for increased government taxes throughout your administration and increase IRS. The IRS has been coming after taxes more than ever, but then to turn around and say, "Look, we're going to help you out here." So again. We're going to have to continue with this when we come back right after our next break. Welcome back, everyone. So, just want to wrap things up here. The difference between the different tax plans. I mean, the biggest complaint is Congress would lose money. They would lose a couple hundred billion over a 10-year period, which is really 20 billion a year, 20, 30 billion a year. When you look at the overall budget, it's a drop in the bucket. The problem is not enough people say no to spending. Not enough people say no to the drops, and everybody wants to drop everything in and add more and more drops without any concrete policy. So, really want to, we're going to move on, but again, that's one of the biggest concerns here, and we're going to get to us from both sides, is that they don't really have a plan. So Trump has released some economic plans. Kamala Harris really hasn't. And she's now getting called out by the CNBC, calling her out and saying, look, she'll release her economic plan in the next few days. The Washington Post editorial board actually also put out a statement saying, look, where's your policies? Or if you go to their website, it's mainly empty on policies. And it's, she's running on the vibe, she's running on the media being thrilled with her running. But again, long on, well, not even promises. I mean, it's just, what is she going to do? People don't know because she hasn't put it out there. So, main thing here is that she's disagreeing with Trump's opinion that the president should have any say in the Fed decisions. Has the Federal Reserve been politicized? Absolutely. In my opinion, Janet Yellen, who ran the Fed, is very, very compromised, and we'll get to a statement she made coming up next, actually. And she says that she'll roll out a more official economic policy next week, but she's not there. So, with less than 3 months left, she's going to roll out something in the coming days. It'll be focused on the economy. We need to bring down costs and also strengthen the economy. Bringing down costs and strengthening the economy is, again, these sound great, but long gone promises, short on details. So again, a lot of people are watching the Fed to see where they go next. With all the turbulence, with the job market, things are a little bit crazy now. And, again, we'll see where they go with this. I think one of the next articles really does talk about Janet Yellen. And I alluded to this. And she claimed the national debt is in a reasonable place. Now, she's not alone here. There are plenty of people on the right that don't care about the national debt. Both parties have kicked the can down the road indefinitely, papering over and not really caring about it. Now the Biden Harris administration, through Janet Yellen, is claiming that there is no problem at all, that the national debt problem is not a problem, which, she emphatically argued that Biden inflation was transitory, would just be fleeting, and would not really hurt the American public. And this is from their massive overspending, with the Inflation Reduction Act and other things that did the opposite. That actually increased inflation, didn't reduce it. And so it's, for some of these comments, he had to later apologize for it because they were proven to be very, very wrong. And these are the economic gurus that we're supposed to listen to in our country, which is really kind of the scary thing. So turning to the national debt for a little bit, it's the real cost of that debt. That's what's really hurting us. And the share of national debt is about 90%, 97% compared to GDP. It's actually, and it's continuing to go up day by day. So in 2023, interest costs were $659 billion. And then so far, we've already spent $600 billion just on the interest on the debt. Not on paying anything down. That's just on the interest. Expected to hit $1 trillion for this year. So again, it's 1.12 trillion is our current deficit is supposed to hit 1.7 to 1.9 trillion. Oh no, in 2020 the shortfall was 0.7. We're expecting to hit 1.9 trillion so far for 2024. So again, we're gonna jump into this, watch this video here that really dives into it. But if you do that, I just want to jump to the debt clock right now. That's kind of a precursor. 35 trillion in debt. And so this is essentially how quick the debt is going up. It's jumping by hundreds of thousands of dollars by the minute. And that gives you an idea because they do highlight the debt clock, but it's a little outdated in this. So I'm going to go ahead and jump back to this video.
You who watch my videos may be tired of my complaints about America's massive debt, but our government's now so deep in debt that taxpayers have to spend $1 trillion a year just on the interest. That's more than all our spending on defense. This will cripple our future. We're on an unsustainable path. Yet most politicians won't even address it. Many brag about spending more.
We're going to spend $1.2 trillion over 10 years.
His opponent bragged about what he spent.
$738 billion. That's with a B.
On the rare occasions when they do acknowledge the debt, they make things up.
I don't know if you noticed, but deficits seem to be coming down.
We literally cut the federal debt in half.
No, that's just not true. Both increased the debt by record amounts, and the increases continue. Our debt's now rising by $1 trillion every 100 days. We're much deeper in debt than we were just 4 years ago when I made this video about the crisis.
The largest stimulus bill in U.S. history.
For once, Republicans and Democrats were in agreement.
It was 96-0 in the Senate.
The motion is adopted.
They applauded themselves. Only a few expressed objections.
$75 million to NPR, public broadcasting, ridiculous.
$25 million worth of funding for the Kennedy Performance Arts Center here in Washington, D.C.
The Kennedy Center has suffered greatly because nobody can go there. It's essentially closed. And they do need some funding. And I said, look, that was a Democrat request. That was not my request. But you got to give them something.
Something they got. $25 million for congressional salaries. $50 million for a museum. Few politicians ask,
but how do you pay for it? We're going to borrow it from China? We're going to borrow it from Russia? We're just going to print the money?
Good questions. Our national debt is already almost $24 trillion. Now it'll jump, percentage-wise, to where Greece's debt was just before unemployment there hit 27%.
The feeling of hopelessness here seems to be spreading.
Greece was bailed out by Europe, but the United States can't be bailed out by others, so how can we pay off our debt? There are really only three options: default, print money, or raise taxes.
Raise taxes on the rich.
You can tax billionaires.
We need to tax the billionaires.
But that wouldn't solve the debt problem. Even if we took all billionaires' wealth, it would only cover about 1/8 of our debt. So others on the left now say, don't worry about debt, just print money.
The U.S. government can never run out of dollars. The federal government prints dollars.
Bernie Sanders' economic advisor says that debt clock shouldn't alarm us.
It's meant to scare people, right? The national debt, tick, 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 tick. There's nothing to prevent the federal government from creating as much money as it wants to and paying it to someone.
This belief, now called modern monetary theory, has destroyed lives in many countries. Zimbabwe is a recent example. The dictator just printed more money. That meant
you had more money chasing the same goods. More money chasing the same goods meant you needed more dollars to buy the same stuff.
A batch of tomatoes will cost me 10 million Zimbabwe dollars, and a packet of onions will cost me $30 million.
The faster prices rose, the more money the government printed, and the faster prices rose.
It got so bad that a $100 trillion bill was worth only about 40 cents.
on the economic disaster in the once prosperous Southern African country.
Inflation also wrecked lives in 1920s Germany, Argentina, Russia, and Venezuela. Finally, there's choice 3. America could just default. But that would eliminate the savings of everyone who invested in America. And it wouldn't solve our problems. When Argentina defaulted, its economy fell apart. Unemployment reached 21%. Once you're deep in debt, none of the options is good. How did we fall so deep in debt when for years politicians have said they'd reduce our deficit?
We have piled deficit upon deficit, mortgaging our future and our children's future. We must act today in order to preserve tomorrow.
We got to deal with this big long-term debt problem or it will deal with us.
But they didn't deal with it. They just talked about it.
Take out a credit card from the Bank of China in the name of our children, driving up our national debt that we are going to have to pay back. That's irresponsible.
$20 trillion. It doubled under President Obama.
And if you include the current stimulus, it's increased even faster under Trump.
It's not compassionate to bankrupt America, but that's the path we're on.
Congressman Warren Davidson's a Republican, but that's your party doing it.
It's not one party. You didn't get $23 trillion in debt because one party's good on the issue and the other isn't.
I interviewed Davidson before the pandemic. You voted for some spending bills, billions for the FCC. Why do we even need an FCC?
Well, who else would be able to regulate speech if there wasn't an FCC?
Right, we don't need an FCC, and you voted for this bill.
Well, you don't get a vote for precise things very often. There are things in these appropriations that do need funded.
At least Davidson usually votes against big spending.
We are on a path to bankrupting our country.
We are. But today, most politicians only talk about spending more.
Over $1.3 billion. Trump just talks the talk. We walk the walk.
What I said then has just gotten worse. Almost $11 trillion worse. Cutting government spending, or at least slowing its growth, is crucial. Yet today's major party politicians won't even talk about it.
Yeah, that's one of my biggest concerns and criticisms of the Trump campaign. Neither party's talking about actually dealing with the debt. And it's the idea of just printing more money is just going to really hurt consumers. It's going to hurt taxpayers. It's going to hurt the economy. I like how he said there's no easy way. Once you dig yourself into a debt hole, there's no easy way out. You have to make the responsible decision to tighten their belt, pay down debt, stop spending on everything, all these goodies that you want, and being good stewards of the financial purse. Congress is anything but good stewards of the financial purse. And again, both sides are very, very guilty. Cutting taxes sounds good, but it's one way to grow the economy, but you can't really grow your way out of this massive spending. The Biden administration has doubled down, and again, the only excuse Trump has is that it was part of COVID. Everybody was pushing for it, like they said. It was 96-0. Everybody thought they had to shut down the government. That's what the experts said. But the experts at Fauci and company have turned out to be liars. And there's no real way to sugarcoat that and speak the truth. So I have one last article before we really jump into our topic today, and this is how are we going to address these issues? One of the biggest ways to do that is tax. So this is actually an article out of California, Los Angeles Daily News. So this is an opinion columnist, and I think it's interesting how she talks about an onslaught of tax increases this November. Why? Because the politicians have been fed up and frustrated with the rules, with the laws. Again, per their Constitution, it takes 2/3 to change the Constitution. So again, the 1879 California Constitution So they can't raise taxes with the agreement of 2/3 of the qualified electors or voters. Now they want to drop that down to 55% approval. So this is Proposition 5 that's meant to drop it from 2/3 down to 55%. Thing is, if it's 2/3, you have to get Republicans on board too. If it's 55%, Democrats can get stuff passed like that all the time in California. So, so they're claiming that doesn't apply to everything, debt for everything, only debt for ancillary structure, which is everything for publicly funded housing projects and programs, the MTA, Bay Area Housing Finance, all of these government organizations that would spend like crazy are all chomping at the bit. The thing is, if Proposition 5 is approved in November, other spending bills will have that threshold dropped in the same election, and a lot of these bills will pass in November if Proposition 5 passes. So again, this is if you think taxes are high now in California, it's just continuing. So again, the way they tell them is like, it's just pennies per every $100. But when your home is worth $1 million, which is the average home in LA, you're paying thousands of dollars in taxes. So again, this is one of many different things. If you're interested, I'm going to post this article and go into it, but I really want to move on to our topic of the day, which is CSEDs. So just want to touch on this real quick. It's a good read. Just go through it, and people are going to be surprised how quickly taxes are going to go up in California if that Proposition 5 passes, and politicians are looking for more and more ways to raise taxes in the Golden State of California. So moving on to our topic of the day, we've been talking about kind of the first steps in the case where you go in, you do what's called the compliance check. So part of the compliance check is you see what tax returns need to be filed. You get your transcripts to file them. You see what you need to do to get compliant. Compliant means two things: filing compliance and payment compliance. So filing compliant is getting on track where you're filing all your necessary or required tax returns. Payment compliance is where you're making sure in the current year that you're not going to owe taxes. So right now, that's estimated tax payments for 2024. The next deadline is coming up September 16th. That's for your estimated tax payment. So you have to look at how much you're going to owe at the end of the year, or you can look at your previous year tax returns from last year, and if you're paying at least 90% of it, or if you're over a certain threshold, 110%, you're in a safe harbor period where you're not going to get hit with extra penalties. So even if your income goes up, it's higher as long as you pay enough in taxes in the current year or compared to last year, you'll be fine. Too many people have no idea what their income is. They have no idea, as far as business owners, what their net profit is. So what I highly recommend is get with the bookkeeper, get with a good CPA that will help you stay on top of your numbers so you can look at your numbers monthly. If you're not looking at your at least quarterly, but you should have an idea and should be stocking away something for estimated tax payments monthly. If you're not doing it, you're going to get surprised and you're going to get hurt. So that is huge, just to stay on top of your estimated tax payments. So it's filing compliance, payment compliance. The other thing you really need to look at is what returns actually need to be filed. And I talked about the 6-year rule going back as far as filing tax returns. The other part of this is when do they expire? And we're running out of time, so we're going to really dive into this when we come back from this last break. Welcome back, everybody. And we're really going to hammer home on expiration dates, or how long does the IRS have to collect on debt. And most people don't understand that the IRS has a limited time. They can't sit there and collect on debt forever. And it's a general principle of law that if you don't move on your rights, you eventually lose them. Now, and so that's why you have people have heard of statute of limitations. It isn't exactly the same thing with taxes, but the IRS calls it a CSED, collection statute expiration date. That's, if you ask the IRS what are the CSEDs, they will tell you when debt is expected to expire. So you got to think about a clock. So it's kind of like a stop clock. It's not like a normal clock that keeps running no matter what. It's kind of a stopwatch. So when you file your taxes, for example, someone went in and filed their taxes on time in 2014. When is that actually filed? So we don't file our taxes in the current year. Right now we're in 2024, but what year are we filing? We're filing 2023. The previous years, because you have to wait till the year is over to say, okay, this is my total income, and I'm going to report that to the government. So it's always a year behind. So if you filed 2014 timely, you would have filed by April 15th of 2015 or thereabouts, or if you filed an extension, October 15th of 2015. So for your 2014 taxes, as soon as you would have filed them was 2015 if you filed on time. Let's say you filed in April of 2015. That's when the stopwatch starts. That time starts going once you get that filed and the IRS assesses it. So it really is based on the assessment date. So if you file it and the IRS loses it and you have to refile it, again, it becomes a pain. This is why when you do submit returns, if you do it electronically, keep those electronic receipts. If you mail it in, send them certified, and keep those receipts. That is your proof that you sent in a tax return or an extension. And believe it or not, it can make or break a case. I actually had a case in New York where it got down to differences between appellate jurisdictions. So it got very complicated. Whereas New York had a different rule. New York and a couple other appellate districts had a different rule than the rest of the country. The rest of the country is like, well, if you can show by the preponderance of evidence that, hey, you mailed it, you sent it, you had proof, you can just use that evidence to show that you filed it timely. There are a few jurisdictions, appellate jurisdictions, where no, you have to have that timestamp. They want that proof of certified mailing with the date. They want it show that you have proof certain that you mailed it. If you don't have that proof certain, case done, go away. We don't want to talk to you. You don't even have an opportunity to discuss and litigate your case. Pretty draconian. So Congress hasn't acted to correct that, so that's the law in those jurisdictions. But again, it's one of the funny parts of the law where you have different standards in different parts of the country depending on who are the judges. So when you file returns, one, keep copies. They can be digital copies, but you got to keep copies. Keep good records, and then a lot of times you can just upload them, put them on a file on a thumb drive or whatever. You keep your secure files, your important files, but follow up on it. So you have to make sure they're actually received and processed. The IRS is good about just not processing stuff. Again, you're dealing with the highly inefficient bureaucracy. So that's why when we do stuff, when we have clients that send in their tax returns, we have to make sure it gets received. So once it gets received and processed, then usually people know they get a refund or they get a bill, one or the other if they owe. But you have to follow up on it, make sure it gets assessed, and then you can either get your refund or pay the bill. Before your return is assessed, you can't. You can pay money in, but it doesn't fully process until the tax return is assessed. It just sits there as a credit. So let's say the tax return was processed November of 2015. IRS, fully processed the return. Now it's in November. When does that debt actually expire? 10 years from November 15th, 2015. So now you're looking at November 15th, 2025 for 2014 tax return. People look at it and go, what? It's 2014, we're in 2024, shouldn't it have expired? No. Now it's looking like November of 2015. So you got to remember, it's like a stopwatch. And there are certain things that pause the time. So if you, let's say you get an argument with the IRS and you appeal it and say, look, I shouldn't have to pay that. So if you're fighting this, if you file for appeals, or if you ask for any kind of appellate review, a collection due process, a cap appeal, if you file for an offer and compromise, or if you file for a bankruptcy, those are the most common times where clock stops. The time stops running on when your debt is going to expire. And another one, a new nasty one that the IRS has been pushing lately, is when you're going to set up an installment agreement. Something as simple as that. So if you promise to set up an installment agreement, that clock stops. But if you don't set up a payment plan in that short time, that clock, your stopwatch, isn't running during that time until you set it up. Or the IRS kicks it out and says, look, they didn't mean to actually set something up. They were just playing games with us. Now we're going to proceed with collections. So the rule of thumb is anytime the IRS can't collect from you, that stopwatch is stopped. So that means if you file for bankruptcy, that usually adds 6 to 9 months. If it's Chapter 7, if it's a Chapter 13, it can be years of time added to tax debt. So that's why when you are considering filing for bankruptcy, if you're considering other issues, make sure your tax debt can be included in your bankruptcy. Most tax debt can, as long as it's old enough. So if you're getting straight and filing a bunch of returns to file for bankruptcy, those returns that you're now filing, if you're filing 3 years to get squared with your taxes and then file for bankruptcy, any tax debt from that new debt that was assessed recently isn't going to qualify for the bankruptcy. So just remember that. A lot of people get very confused going through bankruptcies as to what's going to happen with the tax debt. If you have questions about that, give us a call. We can explain to you, explain your options, either hold off on the bankruptcy, or if you just need to file, just be aware you need to deal with that tax debt when you're done with the bankruptcy. So there's plenty of ways that can extend a 2014 tax debt that was assessed in November of 2015 well beyond 2025. It could be 2027, 28 that it actually goes away. So what happens when it goes away or expires? And this is kind of funny that it actually becomes unenforceable. It drops off of the IRS system. So when you hit that expiration deadline, the IRS can't collect on it. You could always pay it and they'll always take your money and apply it to all the debt. But when their collectors, their IRS representatives are at their computers looking at their screens, they have to dig for expired tax debt. They can't even see it initially. They have to go through and dig and find out what happened on a particular tax year. So once it expires, they're not even going to ask about it. It's not going to pop up on their system. And legally, they can't ask that you pay it. It's legally unenforceable. So, true story, I had a case where I called the IRS, and this one gentleman, he owed around $25,000. Found out that $10,000 of it was about to expire in a week. So I'm thinking look, there's no way they're going to collect on the $10,000, that he doesn't have the money. Let's set up a payment plan on the other $15,000, ignore that $10,000. The representative said, no way, he has to pay this whole $10,000 within the next 7 days, or he has to do it. I said, well, me knowing better, saying, okay, well, I know they can't do anything in 10 days. Good luck to the IRS getting that money. And I called back in 2 weeks. That $10,000 had expired, and I set up the installment agreement on the remaining $15,000, which was what I was going to do anyway. But I had to wait till that expired. Once you wait till that expires, it goes away. Now, caveat here. It used to be, prior to the Biden administration, that you could call and you could get those expiration dates, and they were pretty solid. unless something happened, those dates were pretty firm. The IRS, under the Biden administration, has been kicking those days out. So they don't do a final calculation. They don't give you excellent news. You can pour through the transcripts and try to figure out when is it going to expire, but they don't give you a straight answer anymore. They'll give you dates as long as it's not, if it's currently in a holding pattern, if you're currently in a bankruptcy, you're currently in an offer, they won't tell you because the time isn't running, so they don't know. Their computer systems can't kick out a date. But when you get dates currently, don't trust the dates. They will recalculate it and kick out those dates. We're seeing by 2 to 3 months on almost every single case. So be very wary of that. So just because they give you dates, don't take that as a gospel truth that that's the date that it should expire. And this is one of my big criticisms of the IRS lately, that it makes it harder to understand what your tax rights are and when things go away. But when they do expire, you're home free. And that is the value. A lot of people will go to a non-collectible status that truly can't afford their debt, and with time it'll go away. I want to touch on state taxes real quick. So state taxes usually last twice as long as the IRS, 20, sometimes 30 years. There are some states that don't have any expiration date. They will collect on their tax debt forever. So that's why if you have a choice between paying the IRS or the state, I almost always advise pay the state. Get rid of that. They stick around much longer than the IRS, and they're much more hard to get rid of. So it's and they're much more aggressive about doing this. So don't play around with the states. Get those returns filed. Get the taxes paid off. And you can use that to help you get a better deal with the IRS. So it won't count as an allowable expense up to a certain amount. Now, interesting thing here that I did want to mention. When not all states have a hardship program. So if you can't afford it, a lot of states, Arizona has a horrible hardship program. New York doesn't have a hardship program at all. There's quite a few states that if you can't afford it, you're just out of luck. They will garnish you at will, or you can either set up an installment agreement or try an offer and compromise if they have a valid offer and compromise program. Some states do. Most states don't have a good program. So that's why, again, I say if you can pay something off, pay off the states, get rid of them because they're much more aggressive, harder to work with, sometimes they're a lot easier to get a hold of than the IRS, but if they send your debt out to an outside collection, a lot of them will use attorney offices as official debt collectors, and that becomes very difficult to deal with when you're dealing with outside collectors. If you have those questions, call us. When should things expire? I've actually appealed IRS expiration dates that the IRS moved incorrectly. Don't assume when they move those dates that they're doing it correctly. And one particular case, I think it was $37,000 I got put in my client's pocket as a refund because the IRS moved the dates incorrectly, and that hurt my client to the tune of $37,000. So again, if you have questions about what's happening with these dates, how do I know when my tax debt has expired? Give us a call. We'll go over it and make sure that you know when approximately they should be expiring. But again, take it with a grain of salt. You have to be patient, and sometimes we don't tell people they're gone until we actually confirm it. We'll actually pull the transcripts, and when it shows on your transcripts that the debt has expired and been written off, that's when you're home free. And I've done that for clients where it's been in the hundreds of thousands of dollars that gets written off. And we'll plan for that and help you prepare for the best tax strategy for you using the IRS rules and regulations for your benefit. So again, if you have questions, give us a call, 520-485-7371. Our website is at guardiantaxlaw.com, and all of these shows are being posted to our YouTube account. So you can go back, you can look at the links, you can check out the articles that we're posting. Or with the IRS.gov articles, you can just go to their newsroom. You just go to irs.gov, click on news, and you can find all of the articles that we're talking about. Or you can find all these articles on IRS through Google searches, or the easiest way is to just use the links that we're gonna be posting as well. So be aware. And one last thing I want to say is, if you're filing tax returns late, the clock, that stopwatch, does not start until your return is filed. And so, for example, I had someone that came in and filed 23 years of returns. I know I've shared this story. He did it in 2019, going back to 1996. That stopwatch for 10 years didn't start running until he filed those returns in 2021, and they're going to be valid until 2031. So again, if you have questions, you have a bunch of tax returns, call, get some free advice before you step in a bear trap, and have a great day.